Alright, good morning. Alright, good morning, guys. Welcome back to our daily market review. And we do this every day for 5 days in a week. Every day in 5 days in a week. In pretty today, we don't have much to say because the market delivery for today is just chubby, but it there is always a narrative behind every candle formation, and no matter how indecisive or no matter how chubby it is, we tend to like there is always a reason behind it, so we tend to understand what the market is trying to say even with that particular candle it forms for that day. So that has really drive us into what we are looking at for today. And what you are looking at currently is the Euro daily contract for February 14, 2024, which is Wednesday, right? So ahead of tomorrow, which is Thursday. So it's basically nothing much compared to like in the grand scheme of things, nothing much to dive into. But I have a statement here to read for you guys. Now, the Euro US dollar daily contract for Wednesday, 15th of February 2024 deliver nicely as projected from yesterday. Now, the market opened and swept previous day low, which is the sell side liquidity, then price higher to fill in the inefficiencies. Now, I'm very pleased to see I'm very pleased to see Euro deliver back into the range expansion for from yesterday projection price action. Also, we can see that the body of the candle is respecting the monthly fair value gap or BC consequent encroachment. What I personally mean there is that we if you see this monthly fair value gap, all right, let me expand this because we are dealing with this place. So if you see the monthly fair value gap, we can see that the body of this candle is sitting. Just can you see how equal they are? Right, they are sitting on top of this monthly fair value gap. So that is another very great things to to add as a content. And so that gives me another little clue. That is, it might not happen, but I'm looking towards something like that to see the market retrace a little bit, engineer liquidity again higher, so that we can use that liquidity to run through this whole scenario. All right. So that is basically what I'm thinking about this area. All right. So sorry, and price also form a fair value gap or CB on today price action that is insignificant. So we have a fair value gap here, this price and this price. Why I did not even decide to add anything to it. Why? Because to me it is insignificant. Why? I don't know, but maybe it's experience. But I have come to learn that since we are on a higher time frame PDRA, the little one that is very close to price might not be that significant. That doesn't mean it will not have an influence in price, but the influence on that price is insignificant in the grand scheme of things, and that is just how I understand that. All right, that is it. Now, casting forward, I am anticipating for euro to fill in more of the inefficiency and retrace higher. Now it is higher resistance liquidity run, but we still have inefficiency here. So going in forward, I want to see euro uh you know price into this inefficiency and sweep this price into this inefficiency and sweep this area. And also, let's for example, if we say that this fair value gap is very good to price and all that. Let's for example, we said it is a point of interest for us to see a bullish move that is going to take us above this place, above this high, and above this high, right? So we swept the inducement or liquidity, which some smart money traders call inducement. We swept it and tap into it, and we respect the consequent encroachment of that fair value gap. Now we go higher. If it's actually really going to be effective, I want to see sharp run, right? A sharp run. Now that's fast run will indicate to me my subconscious self, or as you as a trader, that will indicate that there is a new market uh, algorithmic or delivery towards the up towards the higher prices. All right, so that is it basically, but I'm not looking towards that right now. But I just want to add that so that you have that at the back of your mind. Right, so because I'll be referring to this particular video in case or something like that. But overall, we are bearish. On the weekly, we are bearish. On the monthly, we are bearish. Although the monthly is telling us that we've tapped on a monthly fair value gap. So that should be another area to respect. All right, we want to see price respect those areas a little bit, even if not that much. So that being said, let's go to the XY. All right, so this is the XY daily contract, and also we can see the XY also priced into this area. And now I love the way the SY closed. The SY and Euro did not close. Euro did not close like this, but with the signature in price on the XY, it is still showing me momentum to go higher. And if the SY is going to go higher, then Euro will need to go lower. So that is another added confluence for you to be mindful of, right? As a trader, you need to be mindful of all these things because they are very, very important to price. And but for us to go that higher, I want to see us open tomorrow and we price into this area, fill in some of the inefficiency before going higher. So that's my view. And also we have this volume imbalance here. So when we get to that volume imbalance, we're going to see how price react to them. And that is going to give us another added confluence. Okay, so that is it basically. So that's it basically. We're going to this is the Euro US dollar 4 hourly contract. Now the Euro US dollar 4 hourly contract showed nicely the price delivery for today trading range. Now on the 4 hour we can see that market open and swept the equal lows, the previous day low, which engineer liquidity for a bullish move into the inefficiencies in previous day price action. Now we can also consider the move higher as a resistor, as a retracement. So we can go as high as the 4 hour ICT bearish order block, but price might not get there. What I'm actually referring to is this particular order block, right? It's an order block to me. I don't know, but yeah, I should see it as an order block. We might it's it's a significant surprise, and we might likely get to this other block. For me right here, we might eventually get to this other block to deliver lower, because why I am now looking towards this area is that we've already formed a 4 hourly fair value gap that is not going to be that significant surprise. And if we price into it, then we can also consider this particular candle as a bullish order block, right? So if we consider this as a bullish order block, then if price gets to it, it should take us back into this range. Or if we are going to have a change in momentum, then we want to see an impulsive move higher that is going to take out this high, and that is going to start giving us a higher price on euro. So, so that is it for the 4 hourly contract on euro US dollar. So this is the euro, the XY 4 hourly contract, and what I was saying there also apply to this. And we see that prices, local price trading. And if we are going to refer to this as a very shallow block because it creates a fair value gap and also swept a buy side liquidity, then we just traded into it, then it is not going to be significant. Now, that doesn't mean it is not going to have effect on price, but the effect is not going to give us a significant move. Just like I was referring to this bullish breaker or since last week. So that bullish breaker is significant surprise, and you can see how markets, when we tap on it, how we expand, although it was also influenced by the news. But this is what it's basically going to do, whether with or without news. The news just make it faster to deliver. And if I want to see us open, even though we are going to go higher, right? I want to see us open and swept below this particular low. Then we start to engineer higher liquidity on this market, like to start giving us buy side liquidity. But now, I'm currently looking for this sell side liquidity to be taken. And you see this blue line I noted yesterday. I'm still leaving it on price because it has a significant work to say, like the significance in price as well. So that's basically what I have for DXY. Okay, welcome back. This is the 1 hour what contract for Euro US dollar, and it goes to say like this. The Euro US dollar hourly contract shows nicely the intraday price delivery for February for 13 February 2024. The daily profile is an obvious 3 o'clock AM New York local time as the low of the day that swept the sell side liquidity, which is the previous day low. Now, we were looking towards this previous day low yesterday. Now, we swept it and markets begin to price higher. All right, and now we have taken this particular area, and we have priced into this inefficiency. How far can we go? I will want to see the market respect this area. If we did not, then we might be looking out for this liquidity. All right, but over time or currently with our trading condition, I'm looking for lower prices on euro, but this higher price delivery is just a retracement to me. Now we can also consider the move higher as a retracement. Sorry. Now the high of the day is formed at what 11 o'clock a.m. New York local time candle that price into the inefficiency and market retrace back into the trading range. This particular candle, this bullish candle, is the candle that formed the high of today price action. And after that, market will price retrace back into the daily range. And this is what 11 o'clock, 11 New York local time candle. So on the 1 hour, we have this inversion fair value gap. So if in any grand scheme of things, we are still going to go higher, even a short period, if we are going to come to this area, then there is an important to expect price to get to this reversion fair value gap, and also get before like we're going to use that area as an entry to go higher. And our draw on liquidity right now is the buy side liquidity, which is previously high, which is this high. Is our draw on liquidity. So we have this low and this high currently, which is on our range. Then, if we are going to go higher, we're going to come lower into the discount. This is the range between the distance between this range. If we come into the discount, then we go higher. Then if we are going to go lower, instead of coming into the discount, then we take out the buy side, then we use it to engineer liquidity to come lower. So these are the two basic things I have my eyes on going in tomorrow. So let's go to the XY. So this is the XY hourly contract, and as you can see, same thing is almost same thing but inverted. Now we have this range here, buy side, sell side. If you're going to go higher, we're going to come into the premium, then we go lower. If we're going to go lower, we're going to retrace back into the premium and go lower. But if we're going to go higher, we're going to see market price retrace, we will come below this before going high. So these are basically the two different kind of scenario that we can expect tomorrow. So let me check if there is any news event. That means a high impact news event that might alter the price delivery for tomorrow, either positively or negatively. So that because it is very important to always check your calendar. So Thursday, February 15, we have unemployment change on Australian dollar. So we're going to only focus on US dollar and euro. But there is no euro news here. We have only US dollar, which is the core retail sale, Empire State Manufacturing Index, retail sale, and unemployment claim. So the one I'm looking out for is this unemployment claim. It is the one that's very important, which is by 2:30 tomorrow, which is 2:30 Nigerian time, and that is 8:30 New York local time. So if that unemployment claim is going to go higher, we definitely see lower prices before that time. But if the unemployment claim is going to go lower, we will definitely see higher prices before that time. This is how this market work. They price it higher to sell it, while they price it lower to buy it. All right, that is it. Basically, they go lower to buy and they go higher to sell. That is just basically how they run this market. And whatever the market is willing to present for us tomorrow, I think we'll work with that with our open hands. So this has bring us to the end of our video for today. I hope it you all get the information, and you all going to make use of it in the best possible way, in the best positive way. Now let me explain something in a bit. You see that after we sweep this liquidity, right? We we begin to deliver. Now look at this delivery. It's back, forth, back and forth, back and forth, back and forth, back and forth, leaving no room for price to come back here, and also telling us that this particular upward move is a a higher resistance liquidity run. Look at this move lower. See how fast it is. Like fast. Like this move is fast. That is if your move is if market is delivering to a faster in a particular direction and delivering lower in a particular like the delivery in that direction is fast, either lower or higher, that is where your draw on liquidity is live or where the market is going towards. But if it's retracing, it tends to be moving low and not having much effect on price. So thank you for watching these videos, and I hope this gives you a great insight. So if you do like this content, please subscribe to this channel, follow us, and like, comment on this video. If you want any area of improvement, please let me know. All right. Thank you so much, and God bless you. See you tomorrow.